Welcome back, America. We've talked about the legislative solutions in Congress and in state legislatures that are tackling the issue of ESG and its impact on Americans' investment portfolios. But there's another front in this war, one of the most important fronts in the last couple of years, the litigation front that is going on in the courtrooms around America. And we have the perfect guest to take us into that. He's won several major victories against President Biden's administration. And right now, he's leading a lawsuit with 24 states to stop President Biden's Department of Labor from allegedly prioritizing ill-defined ESG concepts into employee retirement income. He is the Attorney General of Texas. He is Ken Paxton. He joins us right now. General Paxton, great to have you on the show.
Hey, thank you for having me back. Glad to be here.
This is such an important piece of litigation. You got nearly half the country behind you, 24 more states plus Texas. Tell us what's behind the lawsuit and what you expect to happen here.
So typical of the Biden administration, they're pretty much setting aside federal law, which was passed in 1974 called ERISA, the Employee Retirement Security Act. And that was designed to make sure that investment managers looked out for the best interest of those that were having their money invested. In this case, the Department of Labor issued guidelines and regulations that changes that focus away from maximizing the benefit and the returns to the investor and changes it so that these investment advisors and fund managers can now look at other factors related to climate change and their social agenda, which means that Americans will retire less wealthy and less well off. Some won't be able to retire, and others will retire less wealthy and in a position where they may not be able to do what they wanted to in retirement.
Wow, it's important to get on top of this. And we've had 2 years where the stock market has already taken a huge bite out of Americans' retirements, their 401ks, their IRAs. Now there are a lot of people estimate the risk level that this environmental social governance can inject into a investment fund. Have there been any calculations? What do the experts that you've brought into this case tell you about the financial risk that an ideological investment can cause?
We don't know the long-term results because we've only had a few years of seeing how these investments work, but already they're seeing lower returns by a few percentage points. And you might think, well, what's 1, 2, 3, 4% a year? It actually adds up to a lot of money over a career and could mean potentially hundreds of thousands, if not millions of dollars less in retirement because of those little changes that don't look so big at the time, but they compound over time. And that's why they passed this Retirement Security Act, because it was designed to make sure that didn't happen. And here we have with the Biden administration not only having an impact on the market with high inflation and hurting investors that way, but now making it even harder for investors to retire.
Yeah. Wow, what an important fight. As you proceed along in this, I want to ask you about the question of labor unions. Labor unions have been a big proponent of ESG, aligned right there with President Biden. They historically have been some of the worst managers of pension funds. Some of the largest bailouts in American history have been labor unions. And in fact, President Biden and all those trillions of dollars of spending in the last couple of years, he bailed out a whole bunch of labor unions that were about to go insolvent on their retirement funds. This adds yet another form of pressure, right? You have these blue-collar workers that are counting on their unions to protect their pensions, and now all of a sudden, they might be taking it down some ideological path that has nothing to do with return on investment. How concerned should we be about the labor union's role in this?
Very concerned. I mean, we were talking about hundreds of thousands, if not millions of Americans who are affected by being part of a labor union. A lot of times they're not the most highly compensated, so every dollar is going to matter. And when you, again, talk about compound interest and the impact that lower returns will have on their lifestyle, it's going to be significant. And some of them really are not going to be able to retire. And even though they're counting on being able to retire, they're not going to be able to retire because the investment returns are going to be lower. Obviously, there's no upside to the American people for this. This is a political agenda that does not benefit the American people, and especially those who can least afford it are going to be the most affected by it. And I think the numbers that I've seen, about 152 million Americans have investments in ERISA plans and will be affected. That's a significant part of our population.
Oh, it sure is. That's a stunning number, big number. Mr. Attorney General, I want to ask about this. Some of the biggest investment firms in this country have sort of bought into this ESG. I think BlackRock, one of the more famous ones. As you continue to police with all of the different consumer protection and litigation responsibilities you have, do you expect some of these investment firms may also run afoul of their obligations under consumer laws or investment laws? Could they also be a litigation target down the road?
There's no doubt that different states have different standards. Ours in Texas could be stronger and could be made stronger by the legislature. I'm hoping that they'll do that. I've seen in other cases where states have very much stricter requirements, more like ERISA, and I think put those companies at risk of being sued for not delivering returns commensurate with returns that would have been invested in a manner that was designed to maximize returns. So yeah, I think these companies are playing with fire, and they could potentially be, billions of dollars of liability. Some of these big companies like BlackRock and Vanguard. I think Vanguard's supposedly backed off.
Right.
I hope that's true, because down the road, I think they all have potential massive liability if they don't pay attention to making sure that their investors are getting the best returns possible.
Yeah, such a great point. And one of the places where ESG is now starting to inject itself is in the credit rating system. I know you've joined an investigation into S&P Global's use of the ESG as a factor in determining whether someone is creditworthy or not. Tell us why that is a significant potential violation of consumer laws.
Well, look, this ends up being another harm to consumer. It affects consumers in different ways, but if they're basing it on political views instead of on financial ability, then it becomes an unfair trade practice to rate people based on something other than actual creditworthiness, as opposed to some social agenda. So again, I think it exposes them to potential liability from states for some type of consumer action or some type of unfair trade practices action.
Yeah, it's going to be interesting to watch all of those develop. There is a real deep concern among those who have really studied the ESG movement that its ultimate goal is to create that sort of social credit score system that China has imposed from its communist government upon its people. You're seeing lots of little pieces of when it seeps into credits and it seeps into investments, it seeps into boardroom and corporate management practices. It seems like we might be moving in that direction. When you talk to witnesses, when you're working on this, does it seem that some of the proponents of this are trying to move towards that Chinese social credit score?
It certainly does. And I mean, what's the justification otherwise? We know that it doesn't benefit Americans financially. We know that it's going to drive up energy costs for the population. And we know that it's, again, the average American is going to be most affected by this, and the poor. And so everything about this designed to give the government more control and designed to drive up costs of energy and reduce returns on investments for the average American. And it looks to me like, again, it's all about government control. It's not, the first question asked isn't what benefits America, it's what benefits the government. And that's a real problem. And if we don't address these situations now, we'll all be a lot poorer, and we'll be a lot more dependent on the government, and we'll be a lot more dependent on outside forces, other countries that we have to depend on for energy that are not our friends. That's a bad situation to be in. We've been there before. And unfortunately, the Biden administration is moving us away from energy independence and into potential situations where we're going to be dependent on foreign powers that are not our friends.
Scary moment. Attorney General Paxton, it's always an honor to have you on the show. This is really an important lawsuit we're going to be watching real closely, but thanks for joining us today.
Hey, thank you for having me again.
Yeah, it's great to have you on. All right, folks, that was an amazing conversation. Keep an eye on the litigation front. A lot going on there. We're going to take a quick commercial break, but we'll be back with more of this conversation brought to you by our good friends at Heritage Action for America. Stay tuned.